Hi, this is Sive Morten with the daily update on EURUSD. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Greetings everybody, let's update our current view on the market. This is euro currency as usual, daily time frame. Well, in our yesterday video research we said that since market has moved deep inside of the overbought condition on the market, at least relatively to the previous price action on the daily time frame, there is a great probability that in the nearest time euro currency will try to correct this condition and move out from this not natural price areas above the daily overbought. Well, this indicator mostly based on the volatility on the market, and as you can see, this is dynamic level of the overbought. It depends on the previous price action. So in fact, the price area above this blue line is a bit unnatural for if you could say nature of the euro currency, particularly this currency pair. So they can see also that was the monthly pivot resistance 1. The September, it's really significant area of resistance, and it's really market yesterday has shown some move to the downside. Also we said that there are two major levels to watch for as the potential entry levels. They are, first one is 127 approximately, that is also the weekly pivot point of the current week. The next one is the daily confluence support, is around 126, 126.20. That is also the weekly pivot support 1. And we said that if on the intraday charts we see some patterns that could point on the reversal, then we probably could understand what particular level has more chances to work as the support before the continuation of the to the upside. Well, unfortunately, I have taken a look on the intraday charts, and those patterns that we would like to see on the euro currency, we didn't get them. So let's take a look at the 4-hour time frame. If you remember, we have discussed the possibility of bread and butter buy. If market will show some retracement to the significant support area, then we could try to buy here with the hope that market will continue move to the upside. So you can see market is too much close below this green line, that is the 3x3 moving average, while bread and butter pattern suggests 1, 2 or 3 closes below and reaching significant support. So that hasn't happened. Of course we could treat as a butterfly, at the bread and butter maybe this retracement. As you can see, market has hit nearest support, shows some 618 retracement back of that thrust, but this really not the big deal. Well, so on the 4-hour time frame I do not see any significant patterns that could be really traded during trading session. You can see the MACD indicator has given us the tremendous trend shifting to the bearish side. This very solid angle of cross to the downside. This is very common after the significant thrusts. So you can see now trend is bearish on the 4-hour time frame. On the hourly time frame, we do not have any patterns as well. So here we have suggested that probably we could get some sort of the double repo sell pattern here, with and probably market could reach the weekly pivot support 1, where we could maybe find some patterns to justify our potential long entry. But currently you can see all that we have is just a gradual retracement to the downside, and we do not have any significant ABCD patterns. So that is just moving out from the level of overbought. Still, I would like to share with you one thought that it's very common and happens on the market very often. For that purpose we need to look at the weekly time frame. Here is the weekly time frame of the euro currency. Particularly speaking, take a look at this thrust to the upside. You can see that this leg is greater than previous move to the downside. Okay, And that has happened the first time during the starting point of this trend to the downside. Any other swings to the downside were greater than the next swing to the upside. It was right here, again and again. But this here we have greater swing to the upside. That is very common situation for a deeper retracement or even medium-term reversal on the market. But in the most cases, very often, when market shows the first bullish thrust to the upside, it shows the deep retracement, because the momentum of the market to the downside is solid, and the first thrust to the upside very often meets significant supply on the market that leads to deeper retracement. And the rule of thumb for that cases suggests that we should buy the first ABCD retracement after the thrust that is greater than the previous thrust down. So the appearance, since this retracement could be deep, then the appearance of ABCD pattern here is very significant. I mean, odds very significant that ABC retracement rather than just AB retracement could appear right here. So that's why that makes me look cautious on the daily time frame. And the deep retracement suggests that minimum 50% or even 618 of this thrust to the upside. So that's why probably it's very difficult to combine these thoughts that probably that market really has significant bullish momentum, and since this is the first thrust to the upside, we could get some significant ABCD pattern. So that probably we should see on the daily time frame, maybe on the 4-hour time frame. Usually it looks like the great and significant in time ABCD pattern, so it should be clear seen, not just such small move, but some greater AB leg, then CD, then BC, then significant CD leg to the downside. That really could happen. That's why, keeping in mind this possibility, we should trade short-term patterns that probably we could see on both of these supports that we have specified here and here, but keep in mind this potential for deeper retracement, because this is really the first thrust to the upside, it's bullish thrust, and as I said, momentum to the downside of the market is solid. Then keep in mind that deep retracement could happen. That's why even we will enter long from that area or from that area, we should have significant and clear context to trade well and protect our positions, because we should accomplish two tasks. First of all, we will have to make the money on potential bullish signals around these supports, since market really could show some upward appreciation from that area. But also we should keep in mind the potential risks that it could be really deep retracement, and we should understand and get the first clues when this potential move to the downside could happen. That's why at current situation it's a bit not quite safe, because if you will take a look again in the weekly time frame, you'll see that around this area also starts the monthly confidence resistance that we have discussed in our weekly thread on the forum. It's around 129, 131 is the monthly confidence resistance area, so it's a significant resistance, and that really could again be another point in favor of potential retracement to the downside. So be very extra careful. Keep your eyes open for any price action. Keep your mind open for some development that probably will be not quite logical from your point of view. And try to open positions at the significant areas of support or even resistance if you are of the bearish view. So that's our current view on the market. Unfortunately, we do not have any clear patterns that we could stick with during the trading session, so probably we should wait a bit longer to get some more signs from the market about its intentions.